Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We heard from Jamie Dimon, who talked about stormy seas in the markets, in part because of the confusion, the uncertainty about these tariffs policies. We heard from Michael Faulkner this morning. He's the Deputy Treasury Secretary and was on Bloomberg Surveillance talking about what the White House is waiting for.
We are looking for China to pull back on its tariff retaliation and to come to the table. We are looking for them to work with us in order to create an environment whereby we can address these vulnerabilities, where they can come to the table and equitably address these long-standing issues that have given them an unfair advantage.
Not sure China raising its retaliatory tariff rate on U.S. imports to 125% could be easily classified as the pulling back that the White House was looking for. But that is indeed what we got today. And we want to get more now with Jordan Fabian, who covers the White House for us here at Bloomberg and is here with us in our Washington, D.C. studio. So, Jordan, President Trump, that is, has made it very clear that he is willing to talk to President Xi. But the signals we're getting from China is not that they're ready to talk. They're still in fight mode, it seems.
That's right. You saw that with the retaliation. They put some restrictions on Hollywood films even and suggested they could retaliate against other sectors. So you basically have an unstoppable force meeting an immovable object, and there doesn't seem to be an end in sight. The president, in fact, indicating publicly that he wants Xi to call him first, and Xi is saying, no thanks.
Peter Navarro, one of the president's counselors, is branding this as 90 deals in 90 days, a name that would make Merv Griffin happy, I think, in terms of its tone. Where are we in this process? We've heard over the last few days there's been a lot of phone calls coming in. There are plans for trips, people coming to Washington, obviously the Treasury Secretary ready to leave on a trip. Where does that stand, and how are they prioritizing those conversations?
Well, I think we're 1 or 2 days past this, and we're at 0 deals. So that's quite the pace that Mr. Navarro has laid out. I want to remind viewers that these trade deals are extremely complex vehicles. I mean, these often take years. I covered the South Korea-U.S. negotiations under President Obama. That's something that took years and years to hammer out. And so they have this sort of Damocles hanging over them, where these tariffs are going to go back into place for all the other trading partners on July 9th, which puts a tremendous amount of pressure to reach some kind of deal. So I would assume there may be some kind of deal in principle before maybe another specific deal is reached, but it's really unclear at the moment.
Well, and is it clear that other countries are taking the administration seriously in terms of the threat to enact tariffs on July 9th if there is no deal reached? I just wonder about the leverage the opposing sides will have against the White House, knowing how easily President Trump has proven to alter course on things like import taxes.
Well, this is the big problem, right, with President Trump's reversal, is that him and his allies are claiming this is the art of the deal. He now has this extreme leverage over trading partners. But to your point, Kayleigh, if he's proven to change his mind on a whim, in fact, he said to reporters he's judging this all on instinct. Yeah. If his instinct at July 9th is, I shouldn't go ahead with this, why should they believe he's serious about imposing those tariffs?
I don't want to make you look into a crystal ball, but on the campaign trail, we heard a lot from the president about a universal tariff. And it strikes me as I hear you talk about the difficulty and detail that goes into each of these negotiations, at least historically, it would be a lot easier for the president to do that. Is there any conversation, is there any way that this ends up with just a 10% across the board tariff, or are they really wedded to this idea of doing this, as they say, more narrowly tailored set of deals?
It could very well end up being that way, and I'll remind people that those 10% tariffs are still in place. I know the market reacted with euphoria with the climb down from these higher rates, but there's still an across-the-board tariff on all trading partners and a 145% tariff on China. That's tremendous change. And so even if those could stay in place going forward, these are tariff rates that are 10 times the average U.S. tariff rate that existed last year. So I'm not sure how markets would take that, even if that were to take place.
Well, and that's before we even get to the sectoral tariffs. Right. You still have 25% tariffs on auto imports, on steel and aluminum imports. And the president has made clear he's still looking at things like pharmaceuticals, chips, possibly lumber and copper. Do we have any sense, Jordan, of when that shoe might drop?
The president indicated this week that he might announce those pharmaceutical tariffs quite soon. As for the others, copper could come in May. I think that's when that investigation is going to conclude. But all of this adds up to uncertainty. It's more uncertainty about his tariff plans. And again, even if the higher rates don't go into place, let's see, you have that 10% baseline, you have this high rate on China, they're going to go up even more if he goes forward with these plans.
We learned this week what we've learned before, that is, it all comes down to the man who's holding the iPhone and issues this edict at the end. President Trump's the one who put that pause in place in a post on Truth Social. We kind of are looking to see who's leading these negotiations, who's doing what. Is that the Commerce Secretary, the Treasury Secretary? Is it the USTR? Why would a country want to, like, what is a country who's negotiating with the White House thinking if they're talking to a Scott Bessent or a Howard Lutnick, if it really is going to come down to President Trump? And what is your sense of his engagement with this process kind of writ large?
It's a great point, is that you have these people like Bessent and Lutnick who at least have some experience in the financial field at the very least. And you could have people like the Vietnamese Deputy Prime Minister who came in this week to talk to the Treasury Secretary. But at the end of the day, it's going to be Trump. Again, he said he's deciding this on instinct. He said this week that when he decided to issue that tweet pulling back on the tariffs, he did it from the heart, and there were no lawyers present. And so you're right. They could theoretically reach a deal with Bessent. Bessent gives it to Trump, and he says, no thanks. And so that's something very difficult for other nations to grapple with.
Just because you mentioned lawyers, and I don't even think we talked about this yesterday in the aftermath of the cabinet meeting the president held, but he alluded to this notion that the agreements he's making with all of these law firms who are trying to head off, potential retaliation from the administration to do hundreds of millions of dollars in pro bono work, that somehow those lawyers are going to be helping kind of craft these trade deals. Is that actually how it gets done? You recruit all the DC big law community to do this work for you?
An expansive definition of pro bono, I think, by the president.
Indeed. De facto government employees. No, it's not. I mean, usually these agreements are hammered out by the U.S. Trade Representative. The Commerce Department will get involved, and they have all kinds of subject matter experts on this. It's very unusual to turn to the private sector, big law, to do this. But listen, if he's hollowing out the federal government, maybe some of those people aren't there. I mean, he needs their help. Yeah.
A busy week when we had this pause. Obviously, we had the executive order on shower heads, all these marquee announcements from the White House. There's also this budget agreement on the Hill. What does the White House do now having that in hand? Sort of how does this process look going forward, the way that the White House is going to be working with lawmakers on advancing his kind of broader economic agenda as this kind of roiling tariffs issue continues?
Well, you've heard him keep haranguing House Republican or Senate Republican lawmakers, too, to get this, quote, one big, beautiful bill. The problem with that is that's a very complex endeavor, and he really needs that even more now that he's done this tariff move to provide relief for Americans who are about to get hit with higher prices as a result of these tariffs. Not to mention the fact that the debt ceiling is coming up sometime later this year, July, August. So that sounds like a lot of time. In Congress, that's not a lot of time. And so he needs them to come together quickly. The Republicans have proven they're fractious within their own ranks, so they really need to come to agreement on some of those key issues on tax.
But is it possible that for all of his rhetoric around promises made, promises kept, what he said on the campaign trail comes true in real life? It's really up to Congress now to decide whether or not a lot of that happens when it comes to no tax on tips and Social Security. There is a risk, right, that the president doesn't get everything he's asked for.
Absolutely. I mean, those are a lot of pie-in-the-sky asks, and some of them aren't popular with Republicans. There was this idea that he floated about raising taxes for wealthier Americans, which has been anathema to Republicans for decades. And so, he doesn't get as much as he wants. Revenue comes down. You have Americans paying higher prices. You end up running into a lot of problems. Not to mention these tariffs are really straining Republican loyalty right now. So for him to then come to them with these asks is a lot for them to take.
Jordan, great to speak with you. Thank you very much. It's Jordan Fabian, White House editor here at Bloomberg News. And Kayla, we have the president now making his way to get his annual physical. I guess that's on his agenda here before the plane takes off for South Florida later today.
Got to check in at Walter Reed, the first annual physical, of course, of his second term, though the president has long argued that he is in perfect health. I think he's called the healthiest president. Called himself, rather, the healthiest
medical
president.
Explanation.
Yeah, we'll leave that to the doctor.
A headline crossing here. Iowa Republican Governor Kim Reynolds announcing she will not seek re-election in 2026. Continue to monitor that. Much more here as Balance of Power continues on Bloomberg Radio and on YouTube.
You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
The markets watch each and every Truce social post and listen to every word uttered by President Trump, as this has been a wild week when it comes to tariffs. A lot has changed, but the thing that remains the same is that the focal point of this trade war seems to be between the world's two largest economies. This has come down in large part to the U.S. and China, after China today made the decision, after the White House's clarity yesterday, that 145% at least tariff rate is now in effect for all Chinese imports. China raised its own retaliatory rate to 125%, suggesting they won't even bother raising tariffs any higher than that, as any further escalation in their mind from the Trump administration would be considered a joke. The Chinese government, though, is still vowing to fight to the end, saying they'll use other countermeasures if necessary, even as President Trump suggests he wants to make a deal.
We'll see what happens with China. We would love to be able to work a deal. They've really taken advantage of our country for a long period of time. We're resetting the table. And I'm sure that we'll be able to get along very well. I have great respect for President Xi. He's been, in a true sense, he's been a friend of mine for a long period of time. And I think that we'll end up working out something that's very good for both countries.
With friends like that, who needs enemies? That President Trump there at the cabinet meeting yesterday. Christopher Smart joins us now. He's managing partner at Arbroath, and we're drawing on his experience both at the National Security Council and the National Economic Council during the Obama administration, where he worked an awful lot on trade issues. Thank you very much for being here. And I wonder sort of how you see all of this playing out. There is the kind of long waiting period we're in now, where we have the White House waiting for a call from Beijing, presumably. Looking at sort of how this is ratcheted up, where things stand, what do you see as the next steps in this détente?
Well, good to be with you. I mean, as you say, with friends like that, who needs adversaries? The thing I think that is spooking markets right now is that on top of all of the other uncertainty, we finally have this U.S.-China confrontation that, frankly, we had been expecting since the first day of the Trump administration. And with all of the distractions around Canada and Mexico, it was always on the back burner until all of a sudden Wednesday, these tariffs were ratcheted up to sky-high levels. And as our Chinese counterparts point out, there's not much of a difference between 125 and 145. It's hard right now to see what the off-ramps are going to be on this particular bilateral relationship. The president says he wants to do a deal, but, again, when it gets to, the other guy's got to call me first, it's not quite clear the other guy's ready to do that.
Well, to your exact point, Christopher, this notion that China has suggested any further ratcheting up of tariffs would be economically meaningless. Does that mean that there was a ceiling to hit there in terms of what would already be the complete destruction of the U.S.-China trading relationship, and we've already hit that ceiling?
Well, it's hard to imagine a product that is still profitable to ship at 125% tariff that is no longer profitable at 145. So I think effectively, when you more than double the price of anything, it's very hard to continue that relationship. And I think you've already seen early reports of shipping companies shutting down, traffic diverted in midstream, and all of that is beginning to unravel right now. The real concern is if this goes on for more than a few days. President seems to be quite nimble in terms of changing his posture. But if this goes on more than a few days or weeks, we're more likely to get locked into something that's going to continue for some time.
I have a definitional question, and that is, are we seeing decoupling happen now? Has it happened? This is a thing that by policy the last administration did not want to have happen. Are we there? And if not, when are we going to know that we are?
Well, we're getting there. Again, nothing. It seems very hard to imagine what you can still ship back and forth when tariffs on both sides effectively double or more what you're sending in both directions. Now, that takes some time to unravel. Maybe there'll be some negotiations that stop that. But I think your broader question is really to the point, which is, when will these threats will continue to loom over trade going forward with China? And so the decoupling or the unraveling of the relationship that started in the first Trump administration, trade is down substantially since then, continued through the Biden administration. that's going to be a problem that's going to continue for a long time. And I'll just add, anybody doing business with the United States isn't just wondering what's going to happen with this administration, but 2.5, 3 years from now, we get a new president of either party. What is that going to look like? It's going to be very, very uncertain compared to what they've been used to dealing with the United States over the last many decades.
Well, and to that point on the uncertainty of the credibility of the United States and the credit worthiness of the United States, Christopher, I wonder what you make of the increasing concern, it seems, we are seeing looking at the activity in bond and currency markets about the suggestion that whether it's U.S. treasuries or the U.S. dollar as the world's reserve currency, that status as safe haven assets may no longer be applicable right now.
Well, I think those are the kinds of things that come unraveled over a long period of time. But I think anybody, including the president, who looked at markets on Wednesday and saw stocks, bonds, and the dollar all selling off together, I think that was sort of a moment of cold sweat if you're an investor, or maybe as the president describes it, the yips. But that's a sense that, as you say, global investors aren't looking to the U.S. as a safe haven anymore. And you're seeing bits and pieces of that as, for example, U.S. interest rate rise, but the dollar is selling off. There is a sense that maybe you want to put your money elsewhere as global tensions are rising.
As I mentioned, you worked on the NEC and the NSC, and I'm curious sort of what form this conversation, should it happen, is likely to take. We're kind of dispensing with the usual back and forth that would be done, drafting a trade deal with a country like China, all of that shuttle diplomacy, all of the work that would go into crafting something down to each and every nuance. What has to happen on that phone call? Is it the phone call itself that's most important here to markets and to policymakers, or does it need to be substantial? Does there need to be something substantial that comes out of it?
Well, I can tell you from your earlier conversation in this half hour, it's not going to be lining up a whole bunch of pro bono corporate lawyers who are angry with you to begin with. These are agreements that are very difficult, very technical to iron out over a long period of time. I think just a phone call will do a whole lot to calm people's nerves, and maybe a framework and a team going back and forth, and something that will show goodwill on both sides that a deal is possible, or a limitation of the tension is possible. Just putting it in a box would be a big step forward at this stage.
Well, to your point on pro bono work, I would just note that President Trump has announced another $600 million worth of pro bono deals with a number of law firms, including Kirkland and Ellis. This just crossing his Truce social feed. So I guess we'll see what role, if any, they play in these many, many negotiations that have to happen. But to the notion that there are other countries that are in this game as well, obviously are actively talking to the White House with a 10% levy still in place, Christopher, which I think we all largely are overlooking due to the dramatic figures we're seeing when it comes to U.S. and China tariffs. What will that 10% flat rate alone, as long as it applies, which we assume will be the duration of this 90 days, what is that going to do economically speaking?
Well, I think you're absolutely right. There is so much going on right now and so much news piled on top of news. You guys are doing a great job trying to make sense of it all for us. But we've all been distracted for what is a wrenching readjustment of the terms of trade with the United States. The average tariff the U.S. has applied to imports has been 2.5% for decades, and now it is jumping to 10%. And that's the expectation that will remain in place. Now, that's not necessarily going to mean a 10% increase in all prices, but as you saw from the consumer consumer surveys just now, people are expecting that those prices to jump. That will lead to a reaction in the Fed at some point, and we're going to have to absorb all of that over a longer period of time.
There's something that we hear from the president, but also his economic advisors, that this could be kind of cured instantly, that we could go back to the way things were. There could be an evenness to all of this. And I want to ask you about kind of the horse out of the barniness of all of this, and this conversation about American exceptionalism. You talked about the kind of reconfiguration that we've seen of geopolitics and economic relationships around the globe. As you sit and look at all of this and assess the damage that's been done here in terms of confidence and reputation, how difficult will it be to snap one's fingers and return to the way things were, or have the comedy that was there just a couple of days ago?
Well, I may actually steal the horse out of the barniness effect that you just referenced, because I think the horse is out of the barn. It's one of those things that takes years and years and years to build up confidence and a sense of transparency that you can rely on another trading partner. And as I mentioned before, the shifts and mixed messages that we've been getting from this administration have been very disruptive to our trading partners. But I think, again, as you look over the last 10 years, and again, it was the Trump administration the first time around, the Biden administration kept some tariffs in place and added some tariffs, which is very different from the way the United States has done business in the past. Anybody who wants to just look past this administration has to keep in mind that we're dealing with a new United States that is turning more inward, that is more likely to apply tariffs than take them away. And that, I think, creates some longer term uncertainty about what adds to the costs of doing business with what has been an exceptional economy.
Christopher, finally, before we let you go, we just have a minute left here. I'm sorry, this may be an unfair question, but would you say the odds of a recession occurring within the next year are now greater that it happens than that it doesn't, even with this 90-day pause in place on the higher rates?
Oh, they have to be greater, because nobody is feeling more comfortable right now that any decisions that were on hold a few weeks ago or even last week can go ahead with them. They're going to want to see what kind of deals come together, how they come together, how many countries sign up, and then are they likely to stick? And then after that, there are the sectoral tariffs that may or may not come and go. Yeah. And then after that, there's this whole U.S.-China relationship that is going to evolve over months and years. So I think that uncertainty has to create higher risks of recession towards the end of this year.
All right, Christopher Smart, it's always great to have you. Former Special Assistant to the President for International Economics during the Obama administration, now managing partner at Arbroath Group, here with us on Balance of Power on Bloomberg Radio and on YouTube as well. Right now, we are looking at some rising equity markets, though. The NASDAQ 100 just crossing 1% gain territory. We'll have more on the latest for you on the other side of this break. This is Bloomberg.
You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Continuing to watch markets this afternoon as we see some relief, some enthusiasm in the equities market, but again, keeping an eye on treasury markets in specific. As earnings season gets underway in earnest as well, we heard from Jamie Dimon for, I think, the third time this week on that conference call with investors. Of course, he did an interview earlier in the week with Fox Business, one that was of keen interest to the President of the United States and preceded his pause on some of those tariffs and reached out in a lengthy memo to JP Morgan investors as well, because the conversation here still revolves around this uncertainty, even as we've seen the tit for tat between the U.S. and China, wondering how all of this winds up.
Well, and that was exactly what Jamie Dimon was speaking to after JP Morgan's earnings, this notion that, yes, he could see how there are good things coming in terms of deregulation and tax cuts, but there's also the uncertainty that comes with these tariff policies and more widely the economic outlook. As we look to what Charlie was just describing, UMich consumer sentiment data, for example, today. So it kind of speaks to the volatility we have all experienced over the last week, as the market maybe has some things it wants to look ahead to, but can't seem to get past a lot of the immediate headwinds when it comes to the tariffs that are still in place right now.
And that data that we got from Michigan is so crucial because we see kind of the primacy of that soft data, that sentiment-related data. Yes, we got a lot of hard data this week on inflation, and while the president did take credit for the fact that it hadn't moved that much, he said no inflation, just a little inflation. Of course, backward-looking data, and this sentiment gives us some insight into how, yes, consumers are feeling about the future, their savings, their prospects, but small business owners as well.
Yeah, well, and that souring sentiment maybe giving Democrats something to seize on here as they try to use a message that arguably helped Trump win the White House, which is about the economy, now against him. And that is the note we begin today's political panel on. Bloomberg Politics contributors Rick Davis and Jeannie Sheehan Zaino are with us. Rick, of course, is a partner at Stone Court Capital and Republican strategist. Jeannie Sheehan Zaino, our Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. Jeannie, as the Democrat, I will start with you on this, as we're hearing messaging now from Democrats on Capitol Hill about this being chaotic, even if President Trump pulled back on tariffs, reciprocal tariffs, that is, for the time being, that the chaos is really what the name of the game here is. Is that a message that works for them?
It should be. I feel, Kaylee, like if Democrats can't use what has happened over the last week against this administration and against Republicans, they ought to hang up their hat and go home, because Donald Trump won last November on the back really of a really heterogeneous group of voters who came together to support him because they were disgusted by the economy that Joe Biden had created, whether that was deserved or not, and particularly the rising prices, particularly inflation. And Donald Trump, in less than 80 days, has made all of that much worse. So if Democrats cannot use that to their advantage as we go into 26 and again to 28, they really don't have any hopes. But I'm hopeful, Kayleigh, I'm going to be optimistic on a Friday that they can use it to their advantage politically, because this has been quite a shock, and not just to Democrats, but Republicans and Trump supporters. And we've heard the discontent from all areas.
Capitol Hill a bit quiet on this rainy Friday in Washington as lawmakers make their way home for recess. But before they did, the Minority Leader, Hakeem Jeffries, spoke about the pause that we saw put in place, all of the undulations related to these tariffs policies. Let's take a listen to what he had to say.
What, if any, advanced knowledge did members of the House Republican Conference have of Trump's decision to pause the reckless tariffs that he put into place? There are several members of Congress who will be aggressively demanding answers and transparency, particularly as it relates to stock purchase decisions that may have occurred over the last few days.
Well, one of those members was Mike Levin, congressman from California, who joined us last night on Balance of Power. He was a signatory to a letter to Republican leadership in the House wanting an investigation into sort of what trades may or may not have happened on the day that that pause was announced. Ginny, how resonant is this call that we're hearing from Democrats as we talk about what their messaging should be, is going forward here? Yes, there is the kind of calamitous rollout of this tariffs policy, as we saw it play out in the markets. Is this something that's going to resonate, do you think, with voters, this focus here on what may or may not have happened in terms of market manipulation?
I think it's absolutely going to. Even before this happened, we had Bernie Sanders, Alexandria Ocasio-Cortez out there saying that Trump and the Republicans are all about the super wealthy. And, you know, one of the astonishing things for me, David, was to have the president sit in the White House and brag about how his friend made $2.5 million today, $900 million, he said about Charles Schwab and Penske. You know, to have a president sitting in the White House saying that is an underscoring of the fact that this is a president and a party about the uber wealthy. He's celebrating publicly that fact. By the way, on the same day that Bloomberg called the best day ever for billionaires, there was our billionaire president celebrating that. Absolutely, again, something Democrats should be able to underscore. Whether they do or not is another question, but Sanders and others are out there doing it. Now the moderates have to take up the reins, and I think that's what Jeffries is calling for.
Yeah, I believe it was a $36 billion swing in the net worth of Elon Musk on Wednesday during the rally. Obviously, it didn't stick yesterday, even if we're seeing stocks in the green today, Rick. But it comes back to what the political liability is for President Trump around the volatility in the markets, as he tried, at least to a certain extent, to look through it. Obviously, maybe couldn't get past some of the activity we saw in the bond market a few days ago. But how much does it matter when people are panicking looking at their 401ks?
Yeah, look, I mean, you know, some of these issues have real resonance with voters, and some don't have much of a partisan edge. This idea that somehow members of Congress, you know, that there's a difference between Republicans and Democrats insider trading. It's pretty clear in the polling we saw before the election day last year that basically voters think everyone is insider trading in Capitol Hill, and, you know, they can't pass a bill that outlaws it, and so they must all be in on it. And so I don't think it's really a partisan issue, but you do see a collapse of the consumer sentiment around the swings in the markets and the uncertainty that's created around this tariff regime. And you know, you're seeing record drops, you know, 10% in March, more in February, you know, 30% since December. In consumer confidence. That's a real poll, right? Those are the polls of consumers telling you whether or not they're optimistic about the future. And it's only grown worse since Election Day, which, by the way, was at one of its highest points in the last, you know, 5 or 6 years. So we've fallen a long way in making sure that our consumers have confidence in our economy, and that's on the president himself. His vacillations and incredible sort of rolling the dice with this massive tariff regime has consequences, and we're now seeing those with consumers.
Rick, put yourself in the position of a Republican lawmaker going home to his district for the next 2 weeks. Maybe he'll have a town hall, maybe he won't. He'll likely encounter a constituent who's going to ask him, why is this happening? Why is the president doing this? Is there a clear message from the White House down to those backbench lawmakers about the rationale for doing this that they can kind of easily, succinctly explain to constituents on the right or the left who just wonder what's going on here and why we've seen the kind of undulations we have?
No, that's part of the problem, is that we don't have a set of talking points that members of Congress on either side can adequately address the current situation. I mean, what guidance has the White House given Republican officials going home, as you point out, for Easter recess? And undoubtedly, they're going to be communicating with their voters and constituents. And what are they going to tell them? Like, well, we got a 90-day pause. That's probably the best news that they can talk about the tariffs, is that nothing, really extreme is going to happen. The fact that we're at I'd say a trade war with China right now sort of cuts both ways with their constituents. But the lack of certainty, the lack of sort of the kind of communications guidance that you would want from the White House. Tell us how to go sell this, right? Give us the end game. Tell us what's the upside for our constituents. They're just not getting. And I think that we've always seen White Houses have trouble communicating their own plans. Certainly the Biden administration had a horrific time communicating how they were going to try and solve inflation. They went through denial, and then, sort of Bidenomics. None of that stuff worked. The Trump administration seems to have a totally different approach, which is like, we're just not going to talk about it, right? We're just going to kind of, tweet our way through this thing and in a spasmodic fashion. And the reality is, it doesn't leave these members of Congress with any real good guidance that they can survive a town hall, which is no wonder why they tell people, don't do town halls. You don't have anything to tell them, and they're all going to be mad at you.
Yeah, we've seen some pretty cringeworthy videos emerge over the last few months of these town halls, to be sure. But of course, one of the other things, in addition to the messaging around the economy, we've seen a lot of focus on, Jeannie, from both Republicans and this White House's progress when it comes to issues of migration and efforts of deporting criminals. Of course, a lot has been focused on of those who were deported to this notorious prison in El Salvador. And Jeannie, I know you are a watcher of the court, so in our final few minutes here, I wonder your reaction to the Supreme Court decision that the administration does have to return the Maryland man, Kilmar Abrego Garcia, who was admittedly wrongfully deported by the administration. He has to come back, and I wonder what you make of the ruling.
Yeah, it's such an important ruling. His 27th day today, Kaylee, in a supermax prison, and the government admitting he is there by accident, but saying, sorry, essentially, we can't get him back. And so now this judge gave them a 2-hour delay. They're still supposed to meet today. A very strange petition by the DOJ, I think, today, to ask the government, or ask the court rather, to postpone a hearing. And the judge came back essentially and said, how could it take you so long to read a 4-page ruling by the court, the Supreme Court? So, the government has to go before this judge and has to say, what are their plans to get him back? And of course, I think this is very much in sync with what we're seeing on the tariff issue. Even if you support the president's policies on immigration and on targeted tariffs, it is the execution in every case which has been a disaster. And I always go back and say, reread Federalist 70. I like the Federalist Papers, Kaylee. What does Hamilton say? A bad government is one that executes the law and the legislation of the country badly, and a bad president is one who does the same. And this is a trap. And Joe Biden fell into the same trap with Afghanistan withdrawal. We're seeing it again. They have to execute well. Otherwise, on immigration, you lose a supporter like Joe Rogan, it's over.
She and Zeno recommending the Federalist 70 there on this Friday afternoon. Really appreciate that. Senior Democracy Fellow at the Center for the Study of the Presidency and Congress, of course, a Bloomberg Politics contributor, along with Rick Davis, partner at Stone Court Capital, a Bloomberg Politics contributor, as well as some insight there about the path forward here for the White House and for lawmakers as they look ahead to the weekend and recess to follow. No shortage of things for them to talk about while they're back home in their districts, Kaylee, including the bill that the House managed to pass earlier this week.
Yeah, which seems to be just a footnote in the week that has been, given all of the volatility we're seeing in financial markets. Though equities are swinging to the upside today. We're right around the highs of the session, up about 1.5% on the NASDAQ 100, 1.4% or so on the S&P. The 10-year yield right now at 4 basis points at 446. We'll have more ahead in our second hour of Balance of Power here on Bloomberg.
You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Turn now to Joe Lavorgna, who's a managing director and chief economist at SMBC Nikko Securities. He was former special assistant to the president, chief economist at the National Economic Council during President Trump's first term. Joe, great to have you with us. And I'd love to start just by asking you sort of how you see these next few months proceeding here. You've been in the room with the president as he's thought about trade, no doubt thought aloud about trade and sort of how he sees policy. What do you expect is going to happen here, aside from hopefully, I imagine the president thinking the phone call, the phone ringing? How does he approach these deals? What's he looking for in terms of just the mechanics of putting these deals together?
We had those reciprocal tariff announcements, as you know, April 2nd, and I was pretty confident that, we were going to at least have that in place until, wasn't going to change till we got to the 9th. And then when the 9th, of course, struck and they were in place, shortly thereafter, the president announced there'd be delays. And I see that because the negotiation process had been done. So you need to come with these tariffs that were very high, very aggressive, and then in the process that was bringing people to the table. And now the negotiation has begun. To me, the maximal amount of uncertainty in some sense with tariffs was earlier this week before that announcement occurred. And now we could just go forward. And my guess is the president is going to make deals with various countries, and that will be to the U.S. advantage, and we're going to kind of clean up this uncertainty, and then we'll move on to the next thing, which would be the budget and what spending cuts, if any, and how they'll impact or help the economy. But I do think this tariff uncertainty will pass. I think the market has. I understand why the market's reacted the way it has. I don't expect it to continue. I do expect the volatility to subside as progress on trade negotiation moves forward.
But it's not just about the market activity, right, Joe? It's also about consumer and business activity, who, while they're waiting for clarity to see what the outcome is 90 days from now, they still have to make decisions with their own purchasing power now, decide what they're doing in terms of inventories, where they're sourcing the supply, what purchases they're making. How much damage realistically can be done, even if you think ultimately we end up at a better place at the end of the day, or at the end of this period, I should say. We still have the whole period to get through.
No, absolutely. And this uncertainty, even as it relates to tax policy and the budget, is also a factor. Right now, it's been a very relatively short period of time. If we're looking at the labor markets, the jobless claim numbers are low. If we're looking at the consumer spending side, the chain store numbers look pretty good. If in the next week or two, there is progress on the trade, I don't expect this uncertainty to really meaningfully have any long-lasting or appreciable effect on the economy. The economy is very resilient. It's very robust. It will come back. If we go 90 days or we're day 89 and there's been no progress made, yes, absolutely, that'll be a problem. But I don't expect that to be the case. I do think my hunch and gut tells me we're going to get some good news somewhat soon.
Joe, about the kind of inherent inflationariness of all of this, I'm curious sort of how you're looking at this. John Williams is speaking at the Puerto Rico Chamber of Commerce right now. He says that his expectation is that these tariffs are going to boost inflation this year to 3.5%, 4%. We've heard from the president's economic advisors during this term a sort of more greatly reduced sense of the inflationary impact this is going to have. What's yours? How do you marry your kind of forecast with what I just mentioned there, what we heard from President Williams and the New York Fed and the White House team today?
We've been of the view that energy prices will come down. That'll be a very powerful offset, especially to any what I think is still likely to be a modest impact from tariffs. So, for example, if you had a 10% across the board tariff, 60% on China, as the president had proposed on the campaign trail, that doesn't even lift in price level terms your CPI more than a point. And of course, it'd be offsets from the currency and offsets from the margins. But on the inflation side, the fact that oil is down at 60 is very encouraging. That might have been due to the administration pushing the Saudis in particular to increase oil production. Mm-hmm. That will provide an offset. So, I mean, the inflation outlook right now is still, I'm still uncertain, is still sticky. The Fed is, I think, looking too much in the rearview mirror on this stuff, because if you look at the markets right now, they're telling you, looking at break evens, there's no inflation problem. And that's also, I think, one of the reasons why the market is behaving. Risk assets have not behaved as well today, is they've listened to Fed commentary from President Williams and think that the Fed might be making a mistake by harping too much on the inflation side and less on the potential growth side, meaning the economy could be slowing. That's what more investors are worried about right now than inflation.
Well, have you changed your own expectation, Joe, for the kinds or the scale of Fed rate cuts we could see this year, the number of them?
No, we've actually been pretty stable. I mean, we marked our growth down based on what will be the weak Q1. We've got GDP around 1.5%, and with most of that weakness concentrated in the first quarter. We did raise our inflation forecast a bit, but not massively. And we kept the Fed basically not cutting until the second half of the year, which is where we've been for a while. I don't think the Fed needs to cut in the short term. I don't think the Fed should cut in the short term. And therefore, we see no change. You've got two cuts, one 25 in September, another 25 in December.
I want to ask you about dollar weakness, and Kayleigh just a moment ago kind of running through a number of the pairs indicating we're seeing softness in the dollar today. And again, drawing on your experience during the first term, I wonder sort of what insight you can give us into the way in which the president looks at the strength of the dollar relative to other currencies. Of course, there's this conversation maybe swirling in the background still about this prospective Mar-a-Lago Accord, getting folks to the table there. It seems like in this current environment with the lack of communication between the U.S. and China, that would be a difficult thing to pull off, to say the least. But what's your sense of the outlook here from Washington on global currencies, the way that this president is looking at the dollar today?
So in general, the trade weight, if you look at the Fed's real broad trade weighted dollar, it's close to a 40-year high. So this notion that the dollar is expensive, you see it in the Fed data. Investors tend to focus on the DXY, as you could pull up on your Bloomberg terminal, which is a very narrow nominal basket of currencies, and that's been a bit weaker. Over time, I could see the dollar perhaps softening a bit, but for good reasons. On things like the Mar-a-Lago Accord, I don't know if that's going to happen. I'm just not privy to those discussions. I think given the president's love of branding and marketing, it'd be hard for me to think that there isn't a Mar-a-Lago Accord at some point, but what it entails, I don't know. But just for a minute on the markets, right now we're clearly in a very sharp deleveraging period. And I wouldn't be surprised if some of this selling just naturally burns itself out, especially as we get more chatter that, hey, look, the administration with its trading partners is making some progress. And ultimately, my base case for the economy, because I'm still an optimist, is that there will be a deal reached with China as it's in both countries' best interest. And I think the Chinese will want to negotiate, and the president, having had some successes with other countries that will precede those actions, will basically push China to do so.
I want to ask you about the bond market as well, though, Joe, because obviously we understand what caught the president's attention enough that he was actually inspired to do a little bit of a policy shift with this 90-day pause on reciprocal tariff rates. When you see the kind of activity we've seen in the bond market, the upward pressure we're seeing on the 10-year yields, is that something you attribute mostly to this back and forth over tariffs, or does that signal something else to you about whether or not U.S. Treasuries are seen as the kind of safety asset that they once were, considering the other kind of fiscal trajectory-oriented issues that the United States is still grappling with, knowing we have a debt ceiling fight potentially ahead of us, that we're going to be looking at a tax package that could increase the deficit if there's not enough spending cuts to offset it. How much is that factoring into what we've been seeing?
So there's a lot there to unpack, but on the 90-day, I don't know if I can remember everything, but on the 90 days,
just explain the bond market to us, Joe.
Okay, so I think so. On why did the administration make a very quick pivot? And to me, this is my own 2 cents. I'm just trying to figure this out, piece the puzzle together. But Kevin Hassett was rumored to have set a 90-day extension on Friday. That was well before the bond market had sold off sharply. And coming in Monday morning, the bond market, the 10-year note was at 385, and then since had a big move after. I think once there was chatter among the various parties that there would be negotiations starting, my guess is the administration said there's no point at this point in not suspending, for those countries that want to negotiate with us now, what are we gaining by waiting? Now, I don't think it was the bond market. I don't think it was necessarily the equity market. I think it was just a whole array of factors. What are we getting? What are we benefiting from if we're having a conversation? Let's try to provide some clarity by having that negotiation now. In terms of the budget, what I'm interested in seeing is, does the Senate parliamentarian, how does she attribute the scoring? Are we going to go with current policy, or are we going to go to current law? Because those deficit numbers the CBO has, we could debate what the number will be, but the numbers they have on paper simply do not make any sense, because a policy that's been in place for over 7 years that has given us revenue share of GDP in line with its long-term average is not going to create by itself a shortage of revenue and larger deficits. What will be is if we have a recession, which I don't expect, and then what happens, of course, on the spending side, that's up for debate. I have no idea what happens on the spending side. I'm hoping we could find some common ground and make some cuts, but that we don't know, and we won't know anything until Congress comes back in 2 weeks following the Easter holiday.
All right, Joe Livornia, answering my multi-part question. We appreciate it,
Ably,
as always.
doing
Former
so.
Special Assistant to the President, Chief Economist for the NEC in the first Trump White House, now Chief Economist for SMBC Nikko Securities America. Always great to have you here.
You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Happening tomorrow are talks between the U.S. and Iran, those set to take place in Oman.
Yeah, Steve Witkoff, the president's envoy, continues to have a very busy travel schedule. He's in St. Petersburg, Russia today. That plane that he flies on is going to Muscat, Oman this weekend for those meetings that the U.S. is going to have with the foreign minister of Iran. Unclear sort of how they'll unfold, who will be there mediating those conversations, or if they'll be direct, but they certainly stand to be pivotal, perhaps. Chris Wright, the U.S. Energy Secretary, the 17th U.S. Energy Secretary, was on Bloomberg Surveillance this morning talking about the importance of that meeting for U.S. energy policy more broadly. Let's take a listen to what he had to say.
His agenda can be summarized as prosperity at home and peace abroad. Lower oil prices help both of those. And the peace abroad that's of most concern right now in the region where I am, in the Middle East, is Iran. During the Biden administration, oil prices were higher. There was sort of an appeasement attitude and no strong enforcement of sanctions, enormous funding to Hamas, to Hezbollah, to the Houthis, and a rapid advancement of their nuclear program. President Trump's agenda is exactly the opposite of that. It's peace through strength, but we simply cannot and will not accept a nuclear-armed Iran.
Well, when it comes to Iran, we saw even more sanctions on the regime yesterday. When it comes to these oil sanctions, the president has said he wants to go back to maximum pressure. Is that part of the conversation you're having with Gulf allies on this tour, that they'd be willing to step in if some of those Iranian barrels come off the market?
Well, fortunately, just from the United States production itself and the size of the global oil market today, absolutely we can tolerate squeezing out Iranian exports. And of course, do all the Gulf neighbors want the same thing we want? Yes. Do they fear a nuclear-armed Iran? Absolutely. Do they think now is the time to turn the screws and end Iran's nuclear weapons program? Absolutely. But yeah, can the world tolerate that? Absolutely. 10 years ago, 20 years ago, could this have happened? No. But today we both have large American oil production, better relations with our neighbors, and a strong, resolute leader. In 40 years of trouble, 45 years of trouble from Iran, we've never had a better chance to reduce Iranian power, reduce Iranian tyranny in the Middle East, and we don't want to miss that opportunity.
Mr. Secretary, the president has said a lot, even recently to me on Air Force One. He likes that gas oil prices are coming down. Do you and the president have a price in mind?
No, I think my whole life I've avoided predicting prices or dictating prices. You know, we have a wonderful free market economy. That's what makes the world wealthier. That's what allows consumers to continually re-express choices in every direction. So no, there's no formula for a good oil price.
insightful conversation with the Energy Secretary Chris Wright earlier today on Surveillance with our colleague Anne-Marie Hordern as we consider the prospects of the talks happening tomorrow between the U.S. and Iran and what implications they may have for global energy markets. We turn to Ellen Wald, non-resident senior fellow with the Atlantic Council Global Energy Center and president of Transversal Consulting. Welcome back to Bloomberg TV and radio. Ellen, when we consider the moment at which we're having the conversation, or the U.S. and Iran is entering these conversations in global oil markets, knowing OPEC Plus is suddenly putting more supply onto the market despite weakness in prices, what difference does the supply of Iranian crude, whether it is more constrained or potentially more available on the market, how does that impact the overall picture?
That's a really good question, and I think there are a couple key points here. And it's interesting that the U.S. Energy Secretary thinks that getting rid of all Iranian barrels from the market is something that the market could tolerate. I think he's probably right, but it's not going to be quite as easy as he thinks. There's definitely spare capacity available that could definitely make up for Iranian barrels if they choose to really squeeze on the sanctions. But I think you will find that China will get very, very upset by this because they really like their discounted Iranian oil. But given that President Trump seems to want to negotiate all things with China, I'm sure that this is also up for negotiation. Maybe if China agrees to buy less Iranian oil and really help squeeze Iran, President Trump's willing to make changes in the tariff regime there. So I wouldn't be surprised if it's all together, it's all lumped together, it's all up for negotiation. I do think that when you look at maybe a potential for more Iranian barrels to come on the market down the line, say after some kind of an agreement, that's something that the oil market and the global market's going to have to work out. It would be great if that happened in conjunction with an economic boom where demand is trending higher than opposed to right now where we're not really so sure.
Ellen, I was struck, I don't know if you were, by what we heard there from the Energy Secretary at the end of those comments. He says he doesn't have a price in mind and there's no formula for a good oil price. I'm surprised only because he was the CEO of Liberty Energy and has spent his whole career in the energy business. I would assume that he would have some sense of that. What do you make of that? As you look at WTI here at $61.44 a barrel and we see these prices drifting lower over the course of the week, this is bound or likely to pose some problems for producers here in this country. How do you identify a good price here for oil in this environment?
I think the Energy Secretary was giving the Ali Naimi answer, and everyone would ask him. He used to be the energy, for Saudi Arabia and the CEO of Aramco, and he would say, if I knew what the oil prices would be, I'd be in Vegas. Or there is no perfect oil price. So he was really channeling that. He definitely has an optimal oil price in mind. The question is it the optimal oil price for consumers or the optimal price for producers? And those are two very different things. And so right now, U.S. producers are not really liking oil prices right now. They'd rather see things higher, particularly because their costs are increasing. The cost to complete a well has just gone sky high with all of these tariffs on steel and in particular the tubular goods that they need to complete wells. And so, with prices trending lower, they're going to have to ask themselves, is it really worth it to complete this well here at current prices? And so those are some hard decisions that producers are going to have to make, and every producer has a different price point at which it makes sense. Smaller producers, they're going to be the first to shut in. Larger producers like Exxon, Chevron, they're going to be able to keep going for longer.
Well, so is what I'm hearing from you, Ellen, that this notion of unleashing American energy, drill, baby, drill, that's going to offset whatever cost pressures may arise, or at least a good deal of cost pressures that arise from higher tariffs on imports, that's not necessarily how this is realistically going to go down in terms of domestic production.
I would say that I see drill, baby, drill and, unleashing American energy as kind of more of a long-term strategy. Right now, we're at very high levels of production. We really don't actually need any more American oil coming into production right now. But, 10, 15, 20 years down the line, we're going to need that. And the things that we can put in place now and do now are going to make it possible for us to unleash American energy dominance in 20 years. So I think that they're not necessarily meant to coexist. The low oil prices, the trade wars right now, it's really causing some pain. What producers would really like now is some reassurance from the Trump administration that this is a temporary turbulence. It's going to, be behind us soon, and they're going to be able to make decisions about how to deploy capital, for the future as soon as this shakes out.
As soon as this shakes out, and you've taken us right where I want to go, which is how are producers, how are oil companies looking at the uncertainty we've been talking about? So kind of dovetailing this conversation about tariffs policy and this 90-day pause with your world with oil, I imagine it's having a chilling effect, as it is in many other sectors. What is the oil industry waiting for? What would amount to the kind of certainty they need here to proceed with capex expenditure, capital expenditure in the way that they were before?
That is a really good question. And I think what they need is some kind of roadmap for what the Trump administration is planning for the next 4 years when it comes to energy policy. What are the regulatory changes going to look like? What's the regulatory regime going to be? All we know is that some of the regulations from the Biden administration have been done away with, but we don't know what's coming in their place. They don't know, and they would like to know. And so the best thing that the Trump administration could do for the energy industry right now is to give them a roadmap. Here are the kind of permitting, things we're trying to do, we want to put in place. Here are the steps we're going to take to ensure that these changes that we're making can't be undone by a future administration. Yes, these trade issues are a big deal now, but we expect in a year or a year and a half, there's going to be a lot of American-made steel available for purchase. And here's what we're going to do to make that possible. And those kinds of things would really help the executives at these oil companies feel more secure about making decisions to deploy, capital, to say yes to that big project, to drill exploratory wells, because they will have this surety that they need that, yes, when they apply for that permit, they can expect to get it in 30 days, not a year, and not have it challenged by 10 different people.
Ellen, I'd like to ask you about something else that the president has floated and we haven't heard as much about, at least within the last week or so, which is this notion of using secondary tariffs, which isn't something that has previously existed in geoeconomics, on countries that buy oil and energy from Venezuela or Russia. He has threatened to do this depending on whether or not he extracts the behavioral changes he would like to see from Venezuela when it comes to cooperation with migrant issues that he thinks they are not currently cooperating with the administration on in Russia when it comes to ongoing conversations around ending the war in Ukraine. Is that threat real to you? What would secondary tariffs on that crude actually mean for the global market?
Yeah, that's a very complicated question because we know what secondary sanctions means. I think that the difference that we're looking at between a secondary tariff in whatever that looks like and a secondary sanction might be that sanctions are actually really hard to enforce. So really, the way that it works is that people get scared about sanctions being enforced, and so they adhere to them. To actually enforce a sanction requires a lot of effort and time, and you've got to make a really big case. You've got to assemble a lot of evidence. And only then can you find them and get the money, and it takes a long time. With tariffs, I think the idea is that it's much quicker. You're not going to have to go through an entire process and assemble all this evidence that, he can kind of say, all right, well, I'm putting this tariff on Spain because they're buying, this thing from Venezuela, and Venezuela is not, concurring with what we want in terms of their drug policy. And because he has a lot more leeway with how to deploy a tariff, it can be deployed much faster than, say, enforcing a sanction. But I'm kind of in the same boat as you guys. We're not exactly sure what this looks like because we've never really seen it employed before.
Ellen, great to get those insights from you. Thank you very much. That's Ellen Wald, non-resident senior fellow in the Global Energy Center at the Atlantic Council, also the president of Transversal Consulting. As we talk about the oil market again, we've seen WTI around $61 a barrel today over these last few days, that drift downward in oil prices. And just to keep an eye on all of the markets here as we kind of push to the weekend, enthusiasm evidently for the weekend as well after this very rough week. In the equities markets, we see the S&P 500 up 2.2%, the Dow and the S&P 500 and the NASDAQ all up on this afternoon. In the bond market, it has been a different story here today and over the course of the week.
Thanks for listening to the Balance of Power podcast. Make sure to subscribe if you haven't already at Apple, Spotify, or wherever you get your podcasts. And you can find us live every weekday from Washington, D.C. at noontime Eastern at Bloomberg.com.